HIMS is changing the healthcare industry by making it easier than ever for people to access treatments for some of the most common health concerns associated with aging. Through their user-friendly website, anyone can gain easy access to products that cover things like sexual health, weight loss, hair regrowth, mental health, and skincare. Some people might not see the potential with a company like this, but you have to realize that HIMS is the first company to really be successful making access to healthcare feel like a safe, discreet, user-friendly experience where people can just go to a website and easily find solutions tailored to them for multiple health issues they might be dealing with. A recent bullish catalyst came in the form of a partnership with Novo Nordisk, allowing HIMS to offer Wegovy, a leading weight loss medication containing semaglutide, the same active ingredient found in Ozempic, which HIMS also provides. This deal alleviates prior legal concerns around HIMS offering a similar compounded version of the drug, significantly de-risking one of the company's more controversial offerings. I think HIMS is a great stock to own, as we'll see when I get into the financial metrics, but after saying all that great stuff about the company, I'll just add a bearish point, which I think is regulatory concerns. Healthcare and pharmaceutical companies are no strangers to government regulation, but specifically with HIMS, making all of these medications so easily accessible when there are some potentially harmful side effects that come with them, seems like it could potentially be an easy target for governments to crack down on. But everything else about this company makes it seem like a very appealing investment. So just let that be a reminder that there is still some risks and potential bearish catalysts to come. So you don't want to make this stock too large of a position in your portfolio, and taking at least some profits as the stock goes up will likely continue to be a good strategy. On my Excel sheet for HIMS, the main thing I'd like to point out is revenue growth. 77% annual revenue growth on average for the past 4 years is amazing, and you'll have a very hard time finding any other stock with that much consistent revenue growth over the past 4 years. There are examples of stocks doing these numbers in the past, but it seems to usually only last about 4 or 5 years, so I am expecting this growth to start slowing down, but anything above 20% annual revenue growth is what I consider to be high growth, and as long as other key metrics check out, revenue growth this high definitely makes me want to buy the stock. Some of those other key metrics will include net income, which HIMS has recently flipped positive on, cash flow, which has also recently flipped positive and is still growing rapidly, total shares outstanding, which have unfortunately been increasing over the past few years, but not at a rate too high where it's a concern for me, ROIC, which has recently flipped positive, their gross margin is high, net margin could be higher, but has recently flipped positive, and their projected earnings per share estimate, which I'd like to see at least double within 2 years, which would be in 2027, and it looks like HIMS is expecting their future earnings to more than double by then. Something on this sheet I didn't mention is cost of goods sold. It does look like their cost of goods sold is starting to increase relative to revenue, so that would be one of my main financial concerns, showing that even with how amazing their other financials look, there are still some challenges with scaling that they'll have to address, which is something I'd like to see improve in future earnings reports. Now, considering all of that, we'll have to think about if their PE ratio is justified. Currently at 78, I definitely think that this is fair and not a crazy valuation at all, since it looks like they'll cut that ratio in half a year and a half from now, if the stock price remains the same. Another reason that I think this is a fair PE ratio that I do want to be careful of and not put too much emphasis on is looking at other stocks with similar or lower growth rates but with much higher PE ratios. Because just because those other stocks are overvalued doesn't mean that HIMS needs to be overvalued too. I'm of course talking about Palantir, which is the main culprit, but also to a lesser extent Reddit, Datadog, and DoorDash, which are all great stocks with similar or slower growth rates than HIMS, but with a much higher PE ratio. Now looking at the graph, I think it'd be reasonable to think that you wouldn't want to be buying after the stock has gone up this much recently. But like I said, I do think that HIMS is at a pretty fair price right now. So if you don't have a position, I think using limit orders to buy any dips would be a good way to slowly start a position. It looks like we just had a double bottom at around $24, which will likely be our strongest support if a major dip comes. But if that doesn't happen, then I wouldn't be surprised if the stock's next low is a bounce off of this high at about $35. With this much recent volatility and a market cap this low at $12 billion, I do think any technical analysis will be pretty difficult and not that reliable. But regardless, I still like to see what the Fibonacci ratios can tell me. Without much obvious structure, I like to use multiple fib retracements. So I'll put one at the high and low from a few years ago, and one at the most recent high and low from the past year. And with those two fib retracements, I'll see if there's any overlapping fib levels, which can help identify some of the potentially more impactful support and resistance levels. This will show us that around the $100 price area will probably be the next major resistance level, which is no surprise considering it's a major psychological level. But also that would put the PE ratio at about 150, which is a valuation that I would think is a bit more appropriate for a stock with a growth rate this high if the overall market is still bullish, especially after another few quarters of growth in line with earnings estimates. Another area of overlap is this level that we just got rejected off of at about $63. And this $40 area is where a 1.6 level is, as well as a few more fib levels, which is why I think this whole range of about $35 to $42 will be a strong support zone. Looking higher, it's hard to know, but just given the financial statements, I could see this stock easily doing a 10x in the next 5 to 10 years. But if we look at the highest fib levels, we can see that anywhere from $150 to $230 are levels we will likely see HIMS at in the next few years, given their high growth rate.